Good morning, traders. Today is Friday, the 12th of November, and time is now 8:17 a.m. GMT. My name's Aaron Hill, and this is another quick edition of Technical Talk. Okay, so US JOLTS job openings is up at 3 p.m. GMT, along with prelim University of Michigan consumer sentiment. Other than this, today is a reasonably quiet one in terms of economic events. Currencies this morning have the Australian dollar and New Zealand dollar on the front foot, mostly in line with risk sentiment. US equity index futures are higher, and European equity cash markets are also mostly positive. This is weighing on the Swiss franc, a currency commonly viewed as a safe haven. And with that, gold and silver spot markets are also lower at current prices. Right, onto the charts. We have the euro dollar on the screen. As you can see, prime support on the weekly time frame at 1473, 1583 has been taken out. We did note that there was some clear buying weakness at this area. Failure to find acceptance above the 1692 high was a clear indication, and the bearish outside reversal formed at this point here also gave an indication to lower prices. With that, with a clear decisive break below this area, we are now looking at the 61.8% Fibonacci retracement at 1281, along with a 1.618 Fibonacci projection at 1237. However, before bearish forces come into play on the weekly scale, we do have to take into account we have Fibonacci support on the daily time frame between 1420 and 1460 to contend with. Now, in line with this, we also have Fibonacci support between 1431 and 1444 on the H4 timeframe. Now, this is also working with a Quasimodo support at 1438. As you can see, we are seeing a some slight interest from buyers at this point, but nothing to really write home about at this point. On the H1 timeframe, we do have room to move lower to the 114 figure. However, we have clear bullish divergence coming out of the relative strength index, which has seen prices move modestly higher. Now we are looking at the resistance at 1467 as a possible upside target for any longs out of the daily Fibonacci support, as well as the H4 Fibonacci support. So do keep an eye on this area going forward. Moving over to the pound dollar, a very similar scenario. The weekly supply turn demand has been taken out. That comes in at 36.29, 34.56. Excuse me. Now, alongside that, we have a double top patterns neckline which was breached in August. Now, this neckline comes in at 36.64, and this was breached, as I said, in mid-August. Now, with that, we are looking at a possible downside move to the 131 region, which is the double top take profit target on the weekly time frame. Now, alongside this, we also have the daily time frame that recently took out support at 34.49. Though we do have considerable Fibonacci support between 32.61 and 33.37 to contend with before we reach the weekly timeframes profit objective. On to the H4 scale, we have resistance at 33.82 currently in play, but to the downside, we are looking at a Fibonacci combination made up of a 100% Fibonacci projection at 33.33, as well as a 1.618% Fibonacci extension at 33.11. In line with this, we are seeing H1 price come off of Quasimodo support at 33.63. Now, do bear in mind that we are likely seeing buyers buy into the sell stops that were taken below the round number at 134. In line with this, we are seeing clear bullish divergence out of the RSI indicator, all tipping the scales for a short-term recovery. If we do close back above 134. We are then looking at probably around this area here at 34.71, which is a quasi-mother support turned resistance. Now onto the US dollar index. Now the US dollar index is an index made up of the US dollar against 6 major currencies. It's a geometric average weighted index. And as you can see, it's been on fire lately. Over the past 2 days, Wednesday came in at nearly 1%, with yesterday coming in at 0.3% higher. We are also touching fresh 2021 pinnacles, and with that, we took out resistance at 94.65. Now, going forward, we do have room, technically speaking, to move to the 94.86 resistance on the dollar. So an increase in the dollar's value could weigh on its peers. So do keep an eye on this chart. And this also follows the for anyone that watches that watched previous technical talks, the point of convergence. This follows the rebound from the point of convergence of trendline support and decision point at 92.71, 93.53. This turned out to be a really nice area for a bullish dollar longs. Now onto crypto, onto the crypto market. We have some interesting price action kicking off at the moment. On Bitcoin, we have just recently clocked all-time highs, but we do have a 1.272% Fibonacci projection coming in at around the 70,000 mark. So do be aware of this. And this follows the recent highs follow a rebound from a supply turn demand between 53,400 and 58,000. Now on to ETH against the dollar. We are closing in on a 100% Fibonacci projection at 4983. And this follows a picture perfect retest of resistance turn support at 43.84. So do be aware. Do be aware of this 100% Fibonacci projection at, as I said, at 49.83. On to Litecoin against the dollar. We are seeing a 100% Fibonacci projection in play at the moment at 274-ish. That's formed a Fibonacci resistance zone with a 1.618% Fibonacci extension, and that comes in at 297-ish, and a 61.8% Fibonacci retracement, and that comes in at 294, I believe. Now on to Ripple against the dollar. We are seeing a potential Gartley pattern form. This comes in between, let me just zoom in so I can see it. 1.78343 and 1.65231. As you can see, the defining point of the Gartley pattern, this is 78.6% Fibonacci retracement ratio, along with an AB equals CD equivalent move and a 1.618% BC Fibonacci projection. So do keep an eye on this level if the price of Ripple continues to rally. And finally, on to gold, another harmonic pattern. We have the Gartley pattern. This was mentioned, this was highlighted in my previous webinar on harmonics. And as you can see, the Gartley pattern is starting to show some signs of bearish, of some weakness. As you can see, the Gartley pattern is made up of the defining element, 78.6%, and that comes in around the 1863 mark, which is also joined with a 100% Fibonacci projection, which is the AB equals CD equivalent, and also a 1.272% BC Fib extension at 1865. So yes, do keep an eye on this. This was highlighted both on Twitter and in the recent webinar, so do keep an eye on this. For take profit targets, the general idea, according to Scott Carney's work, we would be looking at a 38.2%. Let me just mark that up so we can all see where we are. A 38.2% move down to around 1795 as an initial take profit target, with the 61.8% Fibonacci retracement at 1750 as a second and maybe even final take profit target. Now do bear in mind that these Fibonacci ratios are derived from the A point to the D point. So that's it from me. Trade safe, have a lovely weekend, and we'll meet up again on Friday.